Okay, Assalamualaikum. Today I'm going to talk about investment opportunity. So, what is investment? An investment is an asset or item acquired with a goal of generating income and appreciation. In other words, allocate money in expectation of some benefit in the future. So, some of benefit of investment, which are by investing money, it can allow it to grow in future. Investing money also will be saving for the retirement. So there are many type of investment that available in the market, which are share, unit trust, property, bond, and fixed deposit. But today we're going to talk about only three, which are share, unit trust, and property. First of all, real estate property. Real estate property is a investment which purchase with the intention of earning a return on the investment either through rental income or future resale of the property, or both. There are some benefits of real estate property, which are greater asset stability, increased diversification, tax benefit, inflation protection. There are also some risks in the real estate property, which are price impacted by the complex factor, rental return can be tricky, and loan value can impact the economy. There are 4 steps to invest in the property real estate. First is to determine money to afford for an investment property. Second, they need to decide which property type to invest. For example, there are commercial and residential building. Then, determining the investment period. There are 2 types of investment period, which are short investment period and long investment period. The fourth is what are available investment opportunity, which are house flipping, rental yield, or cash out refinancing. There are some related costs involved in investing in the real estate property. First, you need to pay for the down payment, and we need to pay for the legal fees, stamp duty, valuation fees, real estate agent fees, and for the insurance. If we want to sell the property, we will be taxed on the real property gain tax. Every investment needs a capital to start. Assume the property is 500,000 ringgit. The total minimum capital required is 195,050 ringgit minimum. Next, we move on to the share. A share is a security which represents a portion of the owner capital in a business. The performance of the business can often be measured by the number of dividends shareholders receive and by the price of the share. There are 2 types of share, which are common and preferred share. Some benefit of share, which are capital growth, dividend, liquidity, and shareholder benefit. Share also has some risks, which are exchange rate risk, timing risk, stock specific risk, sector specific risk, market risk, volatility risk, and risk of capital loss. There are some procedures that need to be followed to invest in the share. First is to open a trading account and CDS account. then engage remiser, then give an order to buy or sell share. The order are keyed into the automated trading system or ATS at a PO, and the order are matched automatically by the system. Once the order is matched, a trade confirmation is printed out, providing the detail. The broking house will then send out contract note giving detail, and delivery and settlement for the normal transaction is 2 trading days after the date of transaction day. The cost related to the share investment is broker commission, stamp duty, and clearing fees. The total amount of size of capital required to invest in the share is 50,465 ringgit for the transaction value of share of 50,000 ringgit. Next, we move on to the unit trust. Unit trust fund are medium to long-term investment product. They give investors the opportunity to diversify even a small investment in equities, bond, currency, and commodities in market around the world. This is achieved by combining the fund of many investors into pool of funds. There are several types of unit trusts that can be found on the market. First, equity fund, balanced asset fund, fixed income fund, capital or non-capital protected fund, Islamic compliant fund. There are some benefits of unit trust, which are diversification, professional fund management, economy of scale, liquidity, higher potential return. However, the unit trust also has some risks, which are return not being guaranteed, general market risk, security specific risk, liquidity risk, inflation risk, risk of non-compliance, and management risk. There are 3 ways to invest in the unit trust. First, lump sum purchases. Lump sum purchases being done for over the period of 3 to 20 years. The initial investment will increase as distribution and other income is earned by the fund. Next, regular saving. By making a regular saving contribution over a period, the sum accumulated at the end of the period will increase. And EPF saving. The EPF will process a request to transfer an amount from a member's account 1 to approved unit trust fund. Some of related costs involved in the investing in unit trust, which are initial service charge, expense ratio, transaction fee or commission charge, annual management fee, and exit fee. Assuming the total transaction of the value of share is Rm50,000 ringgit, the total capital that is required to invest in the unit trust is Rm54,625 ringgit. There are 2 types of source of capital that been included in this discussion. First, funding from the personal saving, and second one is bank loan. Funding from personal saving is putting on cash into the investment, meaning that there will be 100% reward from the activities. This also means that there will be a need to take on 100% of the risk. And bank loan. Bank give funding which must be repaid over time with an interest. Borrower must prove their likelihood of paying back the loan, and meet any requirement that being set by the bank. In my opinion, real estate is the best investment that among the 3 listed. Real estate property provide leverage, which is use various financial instruments or borrowed capital to increase an investment potential return risk. By using this leverage, the real estate property can take a bank loan as source of capital. Real estate value also tend to increase over time, and with good investment, it can turn a profit when it is time to sell. It is encouraged to invest in the property within these four states, which are Selangor, Johor, Penang, and most important, Kuala Lumpur. These four states are most progressive states in Malaysia.